Piyush Goyal.
Piyush, Piyush Goyal.
Piyush Goyal. Okay.
Sir, I rise to speak on the securities and
Maiden speech.
yes, sir.
Okay, please. So
Sir, I rise to
please
speak
go ahead.
on the Securities and Insurance Laws Amendment and Validation Bill 2010. I thank you very much, sir, for giving me this opportunity to present my maiden speech, as well as to lead the debate from the opposition on this very important subject. I have heard the Honorable Finance Minister, a very senior parliamentarian and minister, present certain facts about the ordinance and now the bill and the thought process that went behind it. Sir, I shall come to those issues a little later. At the outset, I would like to speak more about the big picture that the bill has raised. There are two major issues that this ordinance and subsequently the bill has raised in terms of the big picture. First is the joint regulation of hybrid products. Obviously, the bill relates to hybrid products, and whenever there is a dispute between two regulators in the regulation of hybrid products. And second is the joint mechanism which has been proposed in this bill, which I believe, sir, compromises the independence and the autonomy of the regulators. I shall explain my thoughts a little more in detail. First, the issue about joint regulation of products. It is not something which is new in the realm of possibility in the Indian financial markets. We have had joint regulation of products in operation for several years in this country already. There are time-tested practices in vogue, and very few disputes have arisen over the years. Regulators are not new in this country. We have had regulators for over 20 years, and a multitude of regulators, probably 15 in all now. But we have not had such type of disputes as has been witnessed between SEBI and ILDA come to the public fora, public domain very often. This is a one-off case, and sir, I beg to submit this case also could have been handled better, could have been managed better, and there was no reason to have a knee-jerk reaction of an ordinance or a bill coming into Parliament just at the occasion of one instance. Usually, these disputes have been sorted out and handled at lower levels very efficiently. If they were not handled by bipartisan discussion, they were taken to the high-level committee for coordination in the financial markets and very amicably resolved over the years. An illustrious person as the RBI governor, a very senior functionary in the government scheme of things, heads the HLCCFM and carries out his responsibility with due diligence. Joint regulation is also not new in the markets. Joint regulation has been happening for currency derivatives for several years now. Both SEBI and RBI have been jointly regulating currency derivatives. In fact, very recently the Rajan Committee on Financial Sector Reforms has proposed the establishment of a Financial Stability and Development Council, FSDC, which could be a quasi-judicial body headed by a judge or a legal luminary or a domain expert. Even the Planning Commission has said it would solve most of the issues relating to regulatory competition. I believe the government should have introduced the FSDC rather than a joint committee headed by the FM, in which the powers of decision are taken away by the political and the executive authority of government. I think the dispute resolution mechanism would have been better served by an FSDC type of body rather than going in for a bill which has decided at the government level who will regulate in the case of ULIPs and has also decided on taking over so many powers of the regulators. What should be done in respect of hybrid products? Who should regulate? How should ULIPs be treated? International practices vastly differ in respect of ULIP type products. I beg to submit that in a country like UK, which has been a role model for India and its government and its parliament, the FSA, if it has a dispute with any of the regulatory bodies which work under the FSA, so in UK they don't have separate regulators. The FSA has departments which regulate all the products. It's a single regulator. But occasions arise where a particular branch, maybe the Securities Board, maybe the Insurance Authority, they may differ with the FSA. In such cases, the FSA first tries to resolve the dispute internally. It does not go to any outside authority. Like in India, it tries to resolve it internally. But if unresolved, the mechanism there is an independent complaints commission. It is not a super regulator. It is not a committee which the government is involved in. It is not a committee headed by bureaucrats and ministers. It is an independent complaints commission which takes these matters, addresses them, and if there is still a problem at the end of the day, you go to the courts of the land. The laws provide to go to the courts. Sir, there is another difference in the international practice, and I draw the attention of the Honorable Finance Minister to this very important aspect of how ULIPs are regulated in different countries. Sir, ULIPs certainly come under the regulation of the insurance regulator, but there is an important difference. All investments under the investment portfolio of ULIPs are outsourced to asset management companies, AMCs, which are under the regulation of their respective Securities Exchange Board. So you have ULIP products, but they have two segments to it. One is the insurance part, and the ULIP is managed and regulated by the insurance regulator. But to the extent of the insurance component, the investment component, to avoid duplicity of regulators, the investments are only operated by outsourcing the investment activity to an AMC, to a duly registered AMC which works under the guidelines and regulation of their respective Securities Exchange body. In this case, the investment companies do not do the investment function themselves directly. And that is the fundamental difference which we in India should address. This is a very simple formula. It would have resolved all the problems of hybrid products, especially in the case of ULIPs. Insurance would have got to maintain its control on the insurance business. Investments would have been done through bodies who have domain knowledge, who are controlled and regulated by the Securities Board. And there would have been no overlapping or confusion. In fact, sir, there would have been a major saving of costs. Instead of duplicating the entire effort and the whole organization to do investments, insurance companies would have outsourced that to people with domain knowledge, and they would have been properly regulated by the Securities Board. I can quote a number of international companies which follow this practice. Aviva, Prudential PLC, Legal and General, Abbey Insurance, Liverpool Victoria. These are all in the UK, sir. MetLife, New York Life in the US. All of them, they are partners with Indian companies. Private insurance companies have partnered with most of them. And I'm sure none of them will have a hesitation in following the same system in India. But strangely, the IRDA has a problem in this mechanism. The insurance regulator has explicitly prohibited such outsourcing to competent, experienced and duly regulated AMCs. I completely fail to understand their logic. Honorable Finance Minister, sir, very often opposition members are blamed for only criticizing government policy and not offering solutions. I have in my own humble way, sir, tried to offer a specific solution which would have resolved this problem without the need to pass a law or go to the extent of deciding who will regulate these hybrid products. In fact, sir, I would also like to mention here that in the 70s and 80s, the Unit Trust of India used to issue ULIPs. So ULIPs are not something new. It's not as if it started 7, 8, 10 years ago. The LIC offered the insurance component. They regulated the risk. And the Capital Market Division of the Finance Ministry regulated the investment portion of the ULIP. And it was going smoothly. The Unit Trust of India came under the Capital Market Division of the Finance Ministry. Insurance was a product that the LIC took care of, and everything was running smoothly. And in that respect, sir, I would just like to mention that there are very often hybrid regulation of a certain industry or a product or a person. It is not something new. Look at export-oriented units. Export-oriented units are not necessarily only exporting. They may export, they may do domestic production and sales. But the primary business is exports. The domestic sale is incidental, ancillary, and of a lesser quantity. I think the restriction in that is about 25%. You are allowed to do 25% domestic sales. But that doesn't mean that there are no more export-oriented units, or that doesn't mean that now they become a domestic unit. It is possible that they can be regulated by the Commerce Ministry as far as the exports go and the EOU status is concerned. They are regulated by the Industry Department for registration and licensing, and they are registered by the Finance Ministry for excise and duty drawback and all sorts of taxation issues. So it would not be out of place to have hybrid products, but determined how they would be handled. Sir, in view of the above, I urge you to reconsider the bill in its present form and implement the above suggestion merely by way of an executive order or a recommendation, which I am sure SEBI and IRDA should have no objection in accepting, because it satisfies both their concerns and I believe it is in the public interest. Now, sir, let me turn to the joint mechanism. Lots of apprehensions have been raised about a super regulator having been created by the government. The Honorable Finance Minister also mentioned it, and I accept his contention that that is not his intention and that is not what he has tried to do. However, the executive should not trespass into the functioning of the regulators, and their autonomy should be respected. With due respect, the arbitration of such disputes can best be handled by a judicious mind in the courts of law and tribunals, and not by a committee headed by the Honorable Finance Minister, which in all cases may not have the same expertise and knowledge to impart justice. We have a very illustrious Finance Minister. He can do a wonderful job today, but who knows about tomorrow? Who knows whether everybody will have the domain knowledge, the expertise to be able to impart justice and adjudicate on such important matters concerning the national economy. Of course, there is another aspect. This decision has to be taken in 3 months. 3 months is not a long period, sir. It will need several sittings. You will have to hear all parties' arguments. Experts will have to be consulted. Public opinion and debate will be required. I wonder how all of this will be done in 3 months, especially when we have a situation where the Honorable Finance Minister is busy with scores of group of ministers, empowered group of ministers, committees, subcommittees. He has to handle so many things in the government. I don't know what the other cabinet ministers are doing, but certainly he's a very busy man, handling so many portfolios. And I don't know how we will get time to dispose of such important issues that may come to this committee. Also, this committee will have 2 bureaucrats of the government and an RBI governor whose independence and authority are being unfortunately compromised, and it will have interested parties to the dispute. So all 4 regulators are in the committee. If they could not resolve the matter amicably in the first place, will they not vitiate the atmosphere of the committee when it's deliberating on this issue? Will interested parties not come into the actual deliberation and finalization of the issue? I think patently this type of mechanism needs to be reviewed, sir. Sir, in page 3, para 4, it has been mentioned that the joint committee shall give its decisions thereon to the central government. Sir, I contest this point. It is a very dangerous trend. How can the joint committee give its recommendations to the government? The joint committee is headed by the Honorable Finance Minister. Who else will he give these recommendations to? In fact, the joint committee should communicate to the parties its decision, and there lies the end of the matter. Sir, there are 2 inconsistencies in the bill under reference which I would like to highlight. It has been stated by the Honorable Finance Minister that the RBI will be disciplined only to that aspect with its authority, the joint mechanism in respect of the regulatory functioning, not the monetary function. I think this was stated in the debate in the other house, sir. But that has not been specifically provided in the bill. It has not been stated that the monetary function will not come under the purview of the regulatory of the joint mechanism. And I think this should be specifically excluded in the bill. Secondly, sir, it has also been stated, and right now before I spoke, that first all matters will be discussed bilaterally, then the high-level coordination committee on financial markets will decide, and only if it cannot be resolved by the HLCC FM would the matter come up before the joint committee. Again, this has not been provided in the bill. I urge the Honorable Finance Minister to review both these provisions before finalizing the bill. There's a small observation, I don't think it's relevant, but in page 3, chapter 4, line 25, it may be appropriate to correct a grammatical error. Whatever named called should ideally be whatever name called. That's not the point of debate here. So let me now get into certain specific issues in the ordinance and then the bill. As the Honorable Finance Minister stated, the issue started with SEBI issuing a show cause notice to 14 entities in January 2010. So written replies were received from all the 14 companies by SEBI. Hence, I believe a proper opportunity to be heard was provided before SEBI issued its order. And that order was issued by a quasi-judicial body, a single judge bench of the tribunal or whoever handled SEBI. It has been mentioned that hearing was not given. Even in the ordinance that has brought in this whole issue, it has been mentioned that the government has said in the statement accompanying the ordinance and in the Lok Sabha that opportunity to be heard was not given. I think, sir, from whatever little knowledge of law that I have, it is the prerogative of the adjudicating authority whether to rely on written submissions or to go in for a personal hearing. Unless the government wants to amend the law and make personal hearing compulsory for all adjudication, maybe that would be a good method. It would help a lot of litigation, though prolong it a little more. But once a notice is given, show cause notice, written submissions are received, I think it has been heard in the matter, and it is inappropriate to say that hearing was not given in the matter. Sir, there were a number of behind-the-scene maneuvers, deliberations, discussions and meetings which happened between February and April. The Honorable Finance Minister was a part of those deliberations and meetings. I am actually amazed that with the intervention of the Honorable Finance Minister, such a small dispute could not be resolved amicably. In meetings with the government, the regulators could not come to a settlement. Then I wonder if there will ever be any respect even for this committee, which is going to be headed by the same government and political authorities. So it may have a legislative backing, but in any case, the Section 16 and Section 18 of the Securities Act and the Insurance Act, quoted by the Honorable Finance Minister, does provide the government to give directions. It provides a clause. Then why could it not be resolved at the lower level itself? And I am even more surprised. How could the item be taken off the agenda of the HLCC FM? I think it's gross impropriety. A matter is placed before HLCC FM. They have to adjudicate. They cannot decide. It is like the Supreme Court or some court of law tomorrow deciding that I cannot decide and let the matter go back to the litigants to decide out of court and in consent. How can the HLCC just decide to take it off the agenda and the government allow them to do that? They should have pulled up the socks of HLCC FM, and they cannot abdicate their responsibility. Anyway, the SEBI issued an order on 9th April. SEBI, sir, gave very detailed reasons for its decision. I have the order of SEBI here. It's a very reasoned judgment explaining in detail the reasons why they believe that investment component of ULIPs need to be regulated and must be registered under the SEBI guidelines. Very reasoned, well thought of decision was given before the SEBI by Mr. Prashant Saran, whole-time member. However, on 10th April, IRDA contested, and I have seen the statement by which IRDA contested on this issue. It's a cursory claim that insurance is my baby, so I should regulate on it. Nobody else can interfere. Well, there are laws of the land, there are many laws of the land, How can one body decide that no other body will regulate? Can the finance ministry decide that industries department has nothing to do with an industry, with a company? Only the finance ministry will decide. It's not possible. IRDA has responsibilities, so does SEBI. However, I grant that this did cause uncertainty in the market, sir, but for a very, very short period, from the 9th to the 13th. When it was brought to the notice of SEBI, on the 13th, SEBI issued an order clarifying that it is a prospective decision and not retrospective. All uncertainties of the past were removed. Anything that had happened or which was issued under past policies was not coming under the purview of this decision. Then what was the cause? What was the necessity? Where was the chaos? Where was the uncertainty that caused the government to act in such haste and to bring out an ordinance? In fact, we are informed now that the government advised both parties to go to the appropriate court. I believe in the Lok Sabha it was mentioned that the appropriate court is the High Court in this matter. I very much respect that. It was a correct decision. It is unfortunate that both the parties did not do that. But I wonder, was it possible? Could they go to court on their own? When they were fighting on such petty issues, how could they draft out a common petition and go to court for a joint decision? It was not possible. They were not seeing eye to eye on anything. So they didn't go to court. But 2 writ petitions were filed in the Allahabad and the Mumbai High Court, agitating on the same issues under consideration. SEBI then realized that it's not possible for different high courts to adjudicate on the same matter. And therefore they approached the Supreme Court to transfer all petitions on or about the 27th of April. That was, sir, a full 50 days before the ordinance was issued. A full 50 days before the ordinance was issued, the matter had been put up to the Supreme Court to adjudicate on this matter. Actually, if the matter I thought is in the Supreme Court, and the Minister of State for Finance, by his own admission, while answering question number 4202 on 4th May 2010, told the Rajya Sabha that the dispute has been referred to the Supreme Court, then how if the question arises that parties did not refer it to the appropriate authority? Fine, they did not refer it, but the matter has reached a court which is even higher than the appropriate authority. It would in fact save one layer of litigation. And once the Supreme Court, with all the knowledge and judicious bent of mind at its disposal, decided on this dispute, we could have seen an end to this matter. In any case, the uncertainty was over after the April 13th order of the SEBI. However, on June 18th, we were all surprised to see an ordinance. It was all over in the press. Critiques, editorials, newspaper articles, all spoke about the ordinance and the way it was rushed through without due application of mind. Sir, in all judicial orders, the Constitution provides a process for dealing with disputes, which could be the High Court, which could be the Supreme Court at the end of it. How can a politically led executive dispose of judicious matters, matters under the realm of the Supreme Court as it stood on 18th June? How could the political and executive leadership adjudicate and decide that ULIPs will be regulated by the insurance companies, and we bring an ordinance to that effect? In fact, without providing any rationale for its decision to give the regulation of ULIPs to IRDA. The only thing the government did was quote a certain paragraph 21 of the Law Ministry opinion while issuing this ordinance. I don't know what that para 21 is. In fact, I would urge the Honorable Finance Minister to table the report of the Law Ministry and the opinion of the Law Ministry on the table of this House, so that we can all know really what was the Law Ministry's opinion. Because as I'll go further, I'll show you how the opinion of the Law Ministry has been twisted in this special case, sir. Sir, in the Lok Sabha, it was stated, and I quote, that to save from prolonged litigation, I unquote, and then further I quote again, keep in mind that in financial market, if the actions are not taken promptly, to have a remedial measure, then that will harm the interests of the prospective investors. Had it been an ordinary matter, there would have been no need of it. This was stated while explaining the reasons for the ordinance. So there are three issues which arise. Prolonged litigation. In financial market, action should be taken promptly, and it is not an ordinary matter. So there are hundreds of disputes in court. Most litigation is started by the government. I think we are all aware. The largest litigant in India is the government itself. In income tax, excise, sales tax, you name the authority, and we have a multitude of litigation. They all cause uncertainties, sir. There are cases which have led to foreign direct investment stopping in this country because the income tax department thinks of some logic or some interpretation of the law, and then that is being agitated in different courts. And for 3 years, there's uncertainty in the market. Does the government come out with an ordinance, a bill, a law, to provide for all such uncertainties? If the government was worried about prolonged litigation, why did it in the first place suggest to refer the matter to the High Court and take the plea that since it was not referred to the High Court, we provided an ordinance? Well, the matter, if prolonged litigation was the problem, the government should have said in April that no, we'll bring an ordinance or a law, and Parliament was in session till May 10th, I think. They could have brought the law. Sir, if it is not an ordinary matter, why rush it now? We are advised that it is not an ordinary matter. Then I believe there should be proper application of mind. There should be a public debate. Let the people at large agitate on this issue. And then it should be referred to the Standing Committee of Parliament and then brought to this august House for a decision in the matter. Of course, very unfortunate, but with due respect to the learned and wise Honorable Finance Minister, whom I look upon as a very seasoned parliamentarian, sir. In the Lok Sabha it was said about standing committees, and I quote, "Yes, had it been a normal legislation, I would have no problem of sending it to the standing committee, though I know it very well, as leader of the House, and many of you are fully aware, because you are all members of the standing committees, that how many bills having recommendations of the standing committees are pending for years, not for 1, 2 or 3 years. Sir, I don't want to say further on this matter because it's very embarrassing. I'm a very new member. But I think if that is the case, we must review the system of standing committees altogether, whether it is efficient or whether we should discontinue sending any bills to standing committee, since they only lead to delays and prolonged delay in finalizing and settling the legislation. Sir, there are so many other disputes that need urgent resolution. Today morning, my esteemed colleague and senior leader, Mr. Manohar Joshi, was talking about the boundary issue. There is the splitting of the river waters, the disputes on river waters. So many other pressing items. Does the government want to issue ordinances on that quickly so that we can be saved from prolonged litigation on all such matters? I would urge the government to do a think on that. Sir, I believe it would have been appropriate to wait for the Supreme Court order, since SEBI had already clarified it was a prospective order and no uncertainties were caused as claimed by the government. Further, the ordinance was a rush job. It was not very well thought of. It raised new controversies. Reverse repo and repo have never been a matter of debate in this country. But as an illustration, it has been brought into the ordinance and the bill. So I dread to think if somebody, a wise man and one wise regulator, decides to contest the RBI claim on regulating the repos and reverse repos. So we have brought new things into the realm of dispute now. Sir, very sadly I have to state that in the ordinance, which I said was badly drafted, the RBI governor was made only an ex officio member. He was a member along with the finance secretary, along with the secretary financial services, and 4 regulatory heads. I believe it is very demeaning, it is very sad that the august body of the governor of RBI has been reduced to that level, sir. Fortunately, they did correct it in the bill and elevated him to the vice chairman, and I am grateful for that. But the damage had been done. The Honorable Governor of the Reserve Bank is a hurt man, and he expressed his hurt, his anguish to the Honorable Finance Minister, as it is reported in the press widely. He also wrote a letter to the Honorable FM pleading that they should let the ordinance lapse and not bring in a bill on these lines. It's very sad that the government did not heed the wise words, the words of wisdom of a wise man. Sir, in the past, as I am given to understand, I would be happy to be corrected if I am wrong, the Honorable Governor of the Reserve Bank never came into such meetings where 7-8 people were present. He would always meet the Honorable Finance Minister on a one-to-one independent basis. Whenever there were meetings with regulators, regulatory heads, the Deputy Governor would present the case of the RBI. Now it will be a new trend that the Honorable Governor will be not summoned, but let's say will be called for a meeting by the Secretary Financial Services to attend a meeting on this matter. It's very unfortunate. Sir, a very important point. Without giving adequate reasons, the ULIPs have been included in life insurance. I fail to understand what the reasoning and logic behind that was. However, if they had to do that, the least the government should have done was to provide the test of proportion or ratio between the insurance component and the investment component of this hybrid product. In the statement under Rule 71(1) of the Rules of Procedure and Conduct of Business in the Lok Sabha, while issuing the ordinance, the Ministry of Law and Justice has been quoted to opine, and I quote, that if primarily, I'm sorry I repeat, that if primarily the product deals with insurance and incidentally touches upon the domain of securities, then IRDA has the authority and jurisdiction to deal with the product. Sir, read this opinion very carefully. If primarily the product deals with insurance and incidentally touches upon the domain of securities, then IRDA has the authority and jurisdiction to deal with that product. It's a crystal clear opinion. Doesn't need any more deliberation or discussion or anything. Crystal clear. Primary is the operative word. What is that product primarily? Is it an insurance product? Is it an investment product? Is it incidentally touching insurance or is it incidentally touching investment? And here, sir, I would like to quote. I have come across and I have carried with me 4 or 5 policies which I am happy to place on the table. Sir, there are most insurance policies under the ULIP have a single premium plan in which there is a policy management charge which could be humongous. It could be as high as 40% of the first premium. Then there is a policy management fee which handles all the administrative costs, brokerage commission and whatnot have you. And then there's a small component which is the premium for the life insurance. I'll quote from a policy. A sum assured of 1 crore. The policy first single premium was 20 lakhs. Because it was a high net worth individual and he could negotiate better with the insurance company, policy management fees were only 22,000, 1%. The yearly premium was 33,000. You may kindly note, sir, 1.5% of the single premium, 33,000. And 19.45 lakhs out of 20 lakhs was invested in securities. That's 97.5% went to securities. And sir, I would urge the Honorable Finance Minister and the government, please get these statistics from the insurance companies. You will find most policies have an insurance component ranging from 2, 3, 5 to 10, 12% and an investment component which is in excess of 80%. This point was raised in the Lok Sabha by many members. It was raised at least by 3 members as I read the debate. But it went unanswered either in the beginning or at the end, or even after the clarification was sought by the Honorable Mr. S.K. Saidul Haq, a member of the Lok Sabha. No clarification was given on this particular aspect. I urge the Finance Minister to kindly enlighten us on how the opinion of the Law and Justice Ministry fits into these type of hybrid products. I think the opinion has been bypassed, it has been misinterpreted to suit the proposed legislation, and a completely contradictory stand taken in the ordinance and now the bill. Let us go into the letter and spirit of the legal opinion, and then we will know what the law ministry meant. Sir, it was also stated in the Lok Sabha, and I quote from the law ministry record that was quoted there, that the ULIPs are in operation since last more than 10 years, but the SEBI has now come up with the proposition that entities offering ULIPs should get registered with SEBI in respect of the investment component. Sir, SEBI had clarified that all of this was only prospective, it was not affecting what happened in the 10 years. And then I would urge the House to consider, if a wrong comes to the notice of any authority, should they ignore it because by passage of time a wrong has become right, or should they try to set right that wrong, even when it came to their notice? Maybe 10 years late, maybe it was the fault of SEBI. Castigate the SEBI, hold them responsible, find out what they did for 10 years when this product was freely in the market, causing anguish to thousands of investors and policyholders. But that doesn't mean that the action now becomes vitiated. Sir, just a small aside, in para 6 of the statement attached with the ordinance, the joint mechanism is described without reference to the RBI governor or the finance secretary being a part of the committee. I think the statement of objectives why the ordinance is introduced is a very important document, and it must be properly addressing all the issues that come in the ordinance. As I mentioned earlier, the urgency of ordinance is not explained at all, as there was no chaos caused to old policyholders, and the matter was before the Supreme Court. Lastly, sir, I would like to raise certain salient features of ULIPs. What are these hybrid products? In the statement of objects and reasons, again attached to the ordinance, ULIPs are hybrid or composite instruments which provides a component of investment and a component of insurance. Excellent, I fully endorse that. But then with 2% or 5%, maybe 10% in insurance, is it predominantly investment or is it predominantly insurance? That was the moot point which has been ignored while framing this bill. And then, sir, there are 9 types of charges that are charged to unit holders when they take out ULIPs. There's a premium allocation charge, which is okay, that's the insurance component of it. But there's a huge entry load, there's a commission, there's a brokerage, there's a management charges, there's policy administration charges, there's rider premium charges. And all of this, sir, in the first policy month, it could be anywhere up to 40%. I'm told that on an average the commissions ranged up to 18% and the total debit was up to 30 to 40%. And that's again a matter for the government to investigate. We are going by press reports and what knowledge we have. Fortunately, and I must mention here, this is a very important point, sir, IRDA has now revised all these charges. In July, suddenly IRDA gets wise after 10 years of looting the public that no, these are very high charges. Mutual funds are zero charge, zero entry charge. So suddenly IRDA comes out, restricts commission, restricts policy management charge, restricts the administration charge, restricts the brokerage. This is all an afterthought. Thank God that SEBI raised this issue. At least unit holders will benefit now, if not anything else. Forget the autonomy of regulators. Forget what mechanism we provide. Thank God that the unit holders will save some money now. Sir, I have one very, very important thing that came to my notice at 2 o'clock last night, sir, when I was preparing for this debate. And I saw it in a policy that I had myself taken up. And I am absolutely disturbed and worried for it. Sir, in the case of ULIPs, when there's a hybrid product with an insurance and an investment component, in the unfortunate event of death during the policy period, the claim that is given to the insured is the higher of the sum assured or the NAV. It is not both. It is the higher of the sum assured or the NAV. In case a person takes out a policy, sir, of 15 lakh rupees and the premium is 1.5 lakhs every year, 10 years. I've actually taken it from a live policy. It's a live example. The insurance portion is 7,500 in the first year and 3,000 rupees each year for 9 years thereafter. So in the whole 15 lakhs, the premium for insurance is only 34,500 rupees. The rest is all investment. Suppose, God forbid, at the end of the 4th year, the insured dies. What happens, sir? His NAV is certainly less than 15 lakhs because he's only invested 1.5 lakhs into 4 years, say 6 lakh rupees. So he will get 15 lakhs sum assured. Family should be happy, we gave 6 lakhs, we got 15 lakhs. Insurance thinks we have done a great job. But sir, this is cheating the public. Suppose that same person had taken out 2 separate investment products. He had taken out a pure term policy for 10 years of 15 lakhs as an insurance product, and separately an investment product invested in a registered, regulated by SEBI mutual fund of 1.5 lakh every year. And he would have died unfortunately at the end of 4 years. You know what he would have got, sir? He would have got his 15 lakhs from the insurance company, and he would have got the NAV of his 6 lakhs, 5.5 lakhs, whatever he had invested from the mutual fund. So the insurance companies are eating up the money of ULIP holders, especially those unfortunate people who die in the course of the policy life. I think this is a very dangerous trend. This should be stopped and proper attention should be taken on this matter.
He has one more hour, sir.
Pardon? Sir, unregulated investment is at the cost and risk of the investor.
No, I didn't stop.
Sir, I beg to
He
repeat.
took 45 minutes that I am not stopping.
Sir, I
Being
beg
made
to
in
repeat.
speech.
Unregulated investment
Why
is
do you
at the
perceive I
cost
stop?
and risk of the investor. Insurance is supposed to protect a person from risk, whereas investment creates risk. I think insurance companies should delve on how their monies are invested. Insurance funds are invested. There are 2 types of funds that an insurance company invests. One is their own funds out of the mortality premium that they collect. That money is their own. It is at their own risk and cost. They can invest it how they like. There is no regulation required. If I have some money in my pocket, I can invest it how I like. There is no regulation on that. But sir, the investor's money, with the insurance companies holding as a part of the ULIP, the investor's money is on their behalf at the investor's risk and cost. This needs to be regulated. This cannot be left without any regulation at all. Sir, more than 80% of ULIP policies, especially to private insurers, fail to complete their term and they lapse within the first 2-3 years. These are called persistence issues. I believe this is a very serious issue. In a lighter vein, what the insurance companies have done is to reverse the business so that public at large insures the insurance companies. I'm not stating that. A lawyer from the US said that. There is very poor compliance mechanism at ADA. They have a very small body, not competent, no domain knowledge to regulate investments. Further, policies are missold by misrepresentation, false promises and tall claims. Sir, guaranteeing investment returns under ULIP amounts to mis-selling. Tax breaks arising from entire investment in ULIP, both the insurance and investment portion gets a tax break. That is mis-selling. And I am surprised, sir, the Honorable Finance Minister has not realized that the insurance companies are profiteering at the cost of the government of India. So you take out a policy of 1 lakh rupees, you claim a tax break on it of 33,000 rupees, the government subsidizes that. Some reason or the other 60% of policies lapse in 3 years. So insurance company profits from that money and the government is subsidizing the insurance companies. This is akin to parabanking, sir. You pool the small amounts from a large base of people, let the policy lapse, let the bank account lapse and retain the large sums of money, which is basically cheating small and uninformed investors. As Benjamin Graham had said, investors are not specially trained in resistance to counter the sales pitch by specially trained investment agents. Sir, many insurance companies have used the single premium ULIP to boost their financial performance. 60% increase in premium income is from ULIP, mostly single premium plans, which they get their 30% tax break also. And sir, before the IRDA regulated correctly in July this year, some companies were charging 100% of premium paid as penalty for surrendering the policy within 5 years.
How much more time you need, Mr.
7
Goyal?
minutes.
Eh?
7 minutes. I think a study should be carried out of private insurance companies to show how much profit, how much revenue they have taken out of surrender of such policies. Sir, ULIP states policies subject to market risk and they lapse within the first 2-3 years. These are called persistence issues. I believe this is a very serious issue. In a lighter vein, what the insurance companies have done is to reverse the business so that public at large insures the insurance companies. I'm not stating that, a lawyer from the US said that. There is very poor compliance mechanism at IRDA. They have a very small body, not competent, no domain knowledge to regulate investments. Further, policies are missold by misrepresentation, false promises and tall claims. Sir, guaranteeing investment returns under ULIP amounts to mis-selling. Tax breaks arising from entire investment in ULIP, both the insurance and investment portion gets a tax break. That is mis-selling. And I am surprised, sir, the Honorable Finance Minister has not realized that the insurance companies are profiteering at the cost of the government of India. So you take out a policy of 1 lakh rupees, you claim a tax break on it of 33,000 rupees, the government subsidizes that. Some reason or the other 60% of policies lapse in 3 years. So insurance company profits from that money and the government is subsidizing the insurance companies. This is akin to parabanking, sir. You pool the small amounts from a large base of people, let the policy lapse, let the bank account lapse and retain the large sums of money, which is basically cheating small and uninformed investors. As Benjamin Graham had said, investors are not specially trained in resistance to counter the sales pitch by specially trained investment agents. Sir, many insurance companies have used the single premium ULIP to boost their financial performance. 60% increase in premium income is from ULIP, mostly single premium plans, which they get their 30% tax break also. And sir, before the IRDA regulated correctly in July this year, some companies were charging 100% of premium paid as penalty for surrendering the policy within 5 years.
How much more time you need, Mr.
7
Goyal?
minutes.
Eh?
7 minutes. I think a study should be carried out of private insurance companies to show how much profit, how much revenue they have taken out of surrender of such policies. Sir, ULIP states policies subject to market risk and customer shall be responsible for his decision. Hence, it is not a risk on human life, but a risk on share market. And I don't think IRDA is the right authority to regulate the share market operations or share market risks. Sir, I believe you are asking me to conclude, so I'll now go to the
No,
end
I'm
of
not
the
asking you.
comments.
It's up to you.
Vice Chairman, sir, is related to insurance.
So in conclusion, I would like to humbly submit that in light of arguments put forth, the bill should not be passed in its present form and due consideration should be given to my suggestions about how IRDA and SEBI can both exercise jurisdiction over ULIPs following the international practice where ULIPs are under insurance, insurance is handled by the insurance company and the investments are outsourced to a duly regulated mutual fund. That's the international practice and it's in the best interest of investors and policyholders. Also, I think there should be a wider public debate by experts on this subject. Let us not rush based on some misinterpreted view of the law ministry, which has hardly been debated in the country. 3 hours of debate in the Lok Sabha is all that we have had. I think public opinion has been completely ignored. The RBI governor's comments have been completely ignored. Let us now take care and see that this does not happen. Take an example, in 2008, the Forward Markets Commission ordinance was allowed to lapse, and till today the bill has not been introduced. Similarly, I think, sir, this ordinance should be allowed to lapse and the bill should be referred to the standing committee and wider debate before it is passed by the House. Lastly, sir, what are the powers that the regulator needs to be autonomous? Sir, he should be able to draft and issue regulations. He should have full autonomy to regulate the markets. He should take note and decide on inconsistencies, misdeeds, misconduct. He should develop the market in an orderly manner. By this bill, sir, you have undermined the authority of regulators by saying, we decide, and you have no authority. This will set a precedent for the future, sir, and judicial powers of regulators will be compromised. Thus, the proposed mechanism of joint committee should be dropped altogether, and the few disputes that may emerge, if any, in the future can be referred to the courts as the court of last resort, with a request to take an urgent view in the matter. Thank you very much, sir.
Yes, Mr. Goyal, good speech, delivered as if from an experience.